Good morning and welcome to the Killik & Co market update. Markets are continuing to react to the prospect of a second Trump presidency. US equities rose in the early part of the week, but towards the later part of the week there have been some signs that the rally might be starting to fizzle out. Here's the S&P 500 over the last 3 months. You can see last week's rise, which took the index above the 6,000 level for the first time, but it has since come down a little bit. One reason for the slight decline might be the latest US inflation data which came out this week. Inflation had risen, and that reduces the likelihood of interest rate cuts in the near future, and that's not the best news for US equities. Another reason might be the fact that this week we had confirmation that the Republicans now have control of both the House and the Senate. This will make it easier for the party to pass new legislation, and that will make it easier for Trump to take relatively drastic action, and that may have unsettled markets a little bit. Smaller companies in the US have continued to rally as well. Here's the Russell 2000 index over the last 5 years. It's been on a steady upward trend over the last year, and it had a nice jump last week following the election result. Smaller companies are expected to benefit more from Trump's tariffs. And finally, the dollar has continued to strengthen. It's up over 5% against the pound in the last month alone. £1 would have bought you $1.34 back in September, but now will only buy you $1.27. Investors holding dollar stocks who are valuing their portfolios in sterling should have noticed an increase in their portfolio values thanks to this rise in the dollar. Oil major Shell has won an appeal against some climate activists this week. Back in 2021, a Dutch court ruled that Shell must reduce its emissions by 45% by 2030 in comparison to 2019 levels. Some of the arguments put forward by Shell included that this is a political issue and it shouldn't really be decided by a court. Shell also said that if it reduced its production in order to reduce its emissions, then another oil company would simply step forward and increase its own production. It's interesting to see how fossil fuels and renewable companies have been moving in and out of favor with investors. Here's a 5-year chart showing the total return including dividends for 4 different companies. The blue and the green dashed lines are 2 renewables companies, Ørsted and Vestas, both involved in wind power. The pink and the black lines are 2 oil majors, Shell and Exxon. There was a huge divergence between the 2 groups in 2021 as investors moved into renewables at the expense of fossil fuels, but that trend has now reversed. And lastly, investors seemed pleased with the latest update from music streaming company Spotify. This one listed on the stock exchange in 2018 and had quite a rocky few years, as you can see on the chart here. But the shares have been moving steadily upwards since 2022, and they reached a record high after this week's results. The company now has 640 million monthly active users. That's broken down into 252 million premium subscribers who pay a monthly fee to listen to music without adverts, and 402 million ad-supported users who have the free service with adverts. The total number of users for Spotify is up 11% in the last year. Spotify has raised the prices of the premium service during the last year, and that has helped to increase revenues. Its revenues were up 19% in the last year. The music industry is becoming more dependent on streaming. Here's a chart from the International Federation of the Phonographic Industry showing revenues for the global music industry. The height of each bar shows the total revenue per year, and the colors show where that revenue is coming from. The red is physical music sales, such as CDs or vinyl, and the blue is streaming. After years of revenue decline, the industry's revenues are now on the up. Moving on to have a look at next week, we are expecting results out from Nvidia, TJX, and Intuit. That's it from us. Have a great weekend, and we'll see you next Friday.